President Trump has announced an additional 25% tariff on Canadian steel and aluminum imports, raising the total tariff on these commodities to 50%. This move comes in response to Ontario's 25% surcharge on electricity exports to U.S. states New York, Michigan, and Minnesota. The fluctuating trade policies have significantly shaken investor confidence, leading to global stock market declines, with the Dow Jones, S&P 500, and Nasdaq all falling to lows not seen since September. The dollar weakened, and the price of gold increased as investors sought safer assets. Economists warn that these unpredictable trade policies pose risks to global economic stability, potentially leading to negative demand shocks and fostering inflation. Major banks have revised down the growth forecasts for the year, highlighting the economic uncertainty fueled by ongoing trade tensions. Ontario Premier Doug Ford has vowed to respond aggressively to the U.S. tariffs and has already imposed tariffs on American goods. This ongoing trade conflict highlights escalating tensions between the U.S. and its northern neighbor. The U.S. tariffs took effect on March 4, with Canada's retaliatory tariffs beginning simultaneously. Both Canada and Mexico have stated that these tariffs violate the free trade agreement ratified by the three countries in 2020 under Trump's first presidency. Economists have indicated that the tariffs could disrupt trade between the three countries, upending supply chains and increasing consumer prices across North America. The escalating trade war between the United States, Canada, and Mexico has raised concerns about long-term economic impacts. The tariffs are expected to affect various industries, including automotive and manufacturing, potentially leading to job losses and increased prices for consumers. In response to the tariffs, businesses are re-evaluating their supply chains and considering alternative markets to mitigate the impact. The uncertainty surrounding trade policies is causing companies to delay investments and expansion plans, further slowing economic growth. The international community is closely monitoring the situation, as prolonged trade tensions could have ripple effects on the global economy. Allies and trading partners are urging the involved nations to seek diplomatic solutions to prevent further escalation and ensure economic stability. As the situation develops, stakeholders are advocating for negotiations to address the underlying issues and reach mutually beneficial agreements. The importance of maintaining strong trade relationships and open dialogue is being emphasized to avoid long-term economic repercussions. The outcome of this trade dispute will likely influence future trade policies and agreements, setting precedents for how such conflicts are resolved. The global business community is hopeful for a swift resolution to minimize disruptions and restore confidence in international trade.